All right, what is up, y'all? Tell me if this sounds familiar to you. Okay, you want to buy a multifamily property and you're seeing deals come across your desk, but it seems like they're all overpriced. So how in the world do you know if it's a good deal or a bad deal so that you can confidently pull the trigger on that deal? First, I wanted to clarify, every investor has fought that same battle. In fact, y'all, I believe one of the most important elements of investing is being able to understand how to determine the value of the property. I mean, let's be real, if you don't know how to determine the value of a property, it doesn't matter how many properties find your way or you attract your way, right? So if this conundrum has had you feeling a bit overwhelmed, this video will absolutely help. In fact, by the end of this video, you're gonna know how to determine whether the deal is good or bad and be well on your way to finally pulling the damn trigger confidently. Let's dive in. What's up, y'all? My name is Tyler Devereaux, and I have confidently pulled the trigger to buy a whole bunch of real estate. And the students who have went through our training program have done the same thing a whole bunch of times as well. But just like any other investment, before we consider moving forward on any of these properties, we follow these 6 steps that I'm gonna walk you through to gain clarity and confidence. So get ready, take some notes, because each of these steps are super valuable and we'll build upon each other, okay? All right, let's dive into some of this. So step 1, it's super simple, but also super critical, which is reading through the offering memorandum that the broker will send you. But I want you to listen to this closely, okay? Because there's a right way and a wrong way to do that. When you get the offering memorandum, I want you to go straight to the financials, which will be in the back. Honestly, the only thing that matters at this point are the cold hard numbers, the returns. But what often happens instead is that you're reading through this offering memorandum, absolutely fall in love with the deal, which means by the time you get to the numbers, you're already sold, which means you're gonna justify the financials. Y'all, that is a slippery slope. So skipping right to the financials will save you from slipping and falling, not being able to get up. Okay, let me know in the comments if you know where that line comes from. I'm slipping, I'm falling. Okay, anyway, step 2, okay, is to input the rent roll and the T12 into the underwriting spreadsheet. And if you don't have an underwriting spreadsheet, don't you even worry, you know that I have your back, okay? So in the description below, there'll be a link that will get you access to a great T12 underwriting spreadsheet that will help you get started. You're welcome. You can thank me in the comments for that as well. Step 3 is to set your operating assumptions. Now, this is important, okay? This is how you're going to add value to the property, like raising the rents, improving the interiors, that kind of stuff. And again, this is a super important step in determining if this is the right property. So many people, maybe even you watching this, are waiting for this great unicorn of a deal to come across their desk. I'm looking for deals that I can make great. You should do the same thing. So I did a whole video on common value add opportunities a few weeks ago. So if you want to learn more about that, that aspect of it, go watch that video. Step 4 is when we'll calculate the offer price. Now this part is fairly straightforward, but before you do this, you need to know what your net operating income is. We call that the NOI. It's basically a breakdown of your income and expenses, profit and loss, all those kind of things. So here's what you're gonna do. You're gonna take your yearly income, you're gonna subtract out the operating expenses, and that will get you your net operating income, your NOI. And your underwriting spreadsheet will do all of that for you. So once again, it'll make your job easy there. But from there, we're gonna take that net operating income number and we're gonna multiply it by 10. Now, whatever that price ends up being, that's gonna be lower than what you're gonna need to offer in most markets, okay? In most markets today, you're gonna need to take whatever that price is and double it. Because once again, multiplying it by 10, all that means is that you'd be buying at a 10% cap rate. You're typically not gonna buy at a 10% cap rate in today's market. It would be closer to 5. So if you double that, and it's anywhere near what you can offer for that property and the return still makes sense, then you know that that is a deal that has potential. Now, this isn't the end all be all, but it will give you a rough estimate of what the property is worth and then what the potential growth on that property is, how that can happen. And then based on that number, you can calculate an offer price that makes sense for you and your investors. but also keeps you competitive against other potential buyers, okay? Another sub-step of that is talk to the broker. Ask them what the guidance is. That's the verbiage you should use. What is the guidance? They're gonna give you a good understanding of what you should be offering on that property, and you can see if that makes sense with the strike price that you put together. All right, step 5 is you're going to perform what we call a comparable market analysis. What you're gonna do is you're gonna look at the rent comparables in the area to see how you compare to the local competition. So it can be done a couple ways, okay? It can be done by visiting other properties in the area to see, what they charge for rent, or you can just call those different properties if you're not able to visit the property at this point. All right, now one tip when you're scouting the local competition is to make sure that you're checking for the amenities that they have. Apartments with greater amenities will normally have higher rent prices. So what do they have that your target property you're looking to buy doesn't have? Understand, if you identify those things, that will give you an idea of some value adds that you can bring to the property. All of these things are going to result in a higher rent price, which provides higher value and higher potential on that deal. All right, then number 6, step 6, is you're going to go visit that property, that asset in person. And I'll tell you right now that this is a step that is hugely overlooked, man. Everyone uses FaceTime, Zoom, to do just about everything these days. Listen, get your ass to the property and lay eyes on the property. First, you'll learn from every single property you go and walk. Y'all, I've visited so many properties that have been misrepresented online that would have lost my investors and I a whole bunch of money, or even if we didn't buy the property, it would have lost us a whole bunch of time. So it's super important that you just go visit the property in person. This step will also add huge amounts of credibility with you and the broker because it's an extra layer of commitment, which is key to you. Step 7, and I know that I told you I was only going to give you 6, but I lied. You're welcome. Here we go. So step 7 is to make a damn decision, y'all. The ability to make decisions will absolutely set you apart. In fact, I'll say that the ability to make decisions have led to me making millions and millions of dollars. I've learned how to make massive decisions with massive amounts of clarity because, man, being stuck in uncertainty takes too much damn time. Most of the time, our biggest problem is that we're not making decisions quickly enough, which ultimately just keeps us stuck. So we have to be able to make a decision, have massive amounts of certainty about that decision, or we will not be able to execute at a high level. I'll be honest, sometimes I find myself waiting for this perfect plan, but what I've found is that I'd rather have a flawed plan executed with massive amounts of certainty and massive action than this perfect plan executed with doubt and very little action. Listen to me, there is no perfect decision. That being said, if you make decisions with definiteness, you'll be able to recognize when you need to pivot, where you can improve and how you can once again make this deal great. Those are 7 steps to help you understand if this deal is good or bad. If you're a passive investor, meaning that you want to invest your money with other operating partners into an apartment, make sure that those people operating the investment are taking steps like these. On that note, I have a whole list of other steps that you can take as a passive investor to gain certainty with your decisions as well. I'll go through those on a future video. Make sure you're subscribed so you get that notification. Our investment company, Multifamily Capital Partners, we run through these steps on every property that we acquire, and a number of other steps through due diligence. So if you're looking for a safe multifamily investment with huge upside as well, reach out. You can send us an email at invest@mfcapitalpartners.com. You can simply say, let's get started. We're always looking for ways to help investors put their money to work. I'll put that email and contact information in the description for you as well. If you're looking to acquire apartments, y'all, which is a good chunk of you as well, I hope that you use these steps to go look for those properties and find the best investments out there. And lastly, do not forget to hit the subscribe button and stay tuned for more videos, okay? We'll see you soon. Aloha.